Okay, going to go over the Canadian dollar trade from this morning. This is Money Duck, and this is how I traded this morning. So there was news that came out this morning, which is the unemployment rate, employment change for the Canadian dollar. That's 8:30 a.m. Eastern Standard Time. So their market's the same as ours. Their news events come out when ours do. So as you notice, I got it down on a 1-minute time frame, and then this is the candle right at 8:30. Okay, so we had that jump, that candle started here, surged up, and then pulled back. And when it did, I got in long. So I jumped in at the close of that candle. You'll see my order right there. I went in light with 2 contracts. And then I closed out one basically when it hit the news candle high. That's typically my strategy for a news trade. I like to wait that one candle. And a lot of the, if you're trading through prop firms, a lot of them will not let you trade actually the news release. They want you to be out of a trade beforehand, and then you can get in and trade like a minute or 3 minutes, 5 minutes. It depends on the prop firm or broker you're trading through, whether they allowed that or not. So jumped in there again with 2 contracts. I wanted to go in lightly in case it did continue and pull back off of this drop back here. It didn't. It went ahead up. My stop was below that candle low, and if we pull a if I pull the target tool off that trade, there it is. So let me lock it in. So again, getting in there, stop below that candle low, and then basically it went over 1.5. So I got in as it approached and got near that candle high. The price is right there. Yeah, 45. So you're looking at right around in here. So again, when it approached that size. So I got out about 1.5 to 1. So my reward was 1.5 to my risk. So good trade on that. And then I left I left half the order on, and then of course and I moved my stop to a break-even point, and even a little better than break-even, because again my entry was here. You'll see I got stopped out over here, so I'd moved my stop a little bit. So a little better than break-even on the second half of that trade. So good trade overall. When it pulled back here and turned right here, you'll see I actually did buy back in. So it came and turned. We have a nice morning star pattern here with a little star, and I'm like, I'm going to go ahead and buy back in. So I bought back in, and I was going to trade it again to the news high. It didn't go. So when I bought, it immediately started pulling back. My stop was tight in here, and then I actually got stopped out right here. Upon getting stopped out, so something you have to notice, and we're always watching structure, we're always watching lows and highs, we're always watching swings. So when I get stopped out, so that's why we use the lows and highs to have our stops off of. Getting stopped out here, you basically, where you put your stop should say to yourself, okay, and this was a low, okay, this was our higher low right here, but basically saying to yourself, if you pull down, if price pulls down below that low, go ahead and take me out, because I should probably consider going in short. Okay, that's that change in structure. So we had over here, we have bullish, a bullish pattern, bullish strength, and then we see a low, lower high, lower low. Well, that's the bearish pattern kicking in. I went ahead and bought because I thought, well, we've got a morning star here. We had a nice push off news. Let's see if that continues. And it just didn't. So my thought process was, my stop's going to be tight. It's going to be under that low. And if price comes down and takes me out, especially if a candle closes below that low, or low to break over here, then I want to be prepared to possibly take it long. So you don't want to get married to a bias in trading, because a lot of times we end up, and that was our low to break. A lot of times we end up changing directions for the day. So once it did that, after it pulled back right here, so it pulled back up basically to test this low swing here, and then gave a bearish candle. I got in a little beforehand. I got in as this candle started moving down. It was basically off of that pullback. When that candle closed, I thought, you know what? It started out bearish. I thought I'm going to go ahead and try and jump the gun and get in. Waiting on a candle close, you would actually get in at that candle close. So either or, you would be in. So winning trade on the first trade, losing trade on the second trade. I'm still in it, I believe. Or did we just get stopped out? Nope, we just got stopped out. So I was still in it. And it moved down, and basically I just moved my stop. So I trailed my stop along the way. I closed out one contract. So I only put in two. Again, went in lightly, put in two contracts, closed one contract here when it was past level 3. Okay, so past level 3, and I closed one contract. So I got a little over 3-to-1 on that half that trade. Okay, and then moved my stop, and where we are now, we were this sideways movement. I had moved my stop down, and you'll see right here that my trade was actually closed out for me just a few candles ago. So on this pullback, the trade was closed out. So and here's the thing is, we're looking at highs and lows, we're looking at swings, we're looking at it come down, forming lower lows, lower highs throughout here, and then we actually have kind of equal high. It's a little bit higher, but more than that, we have equal lows in here where the candles turn. So we had a double bounce in here, double bottom, and it pulled back up and then pulled back after it tested this high over here, pulled back, found some ground, and then broke the highs over here, this flat plateau area. So right now we're testing that area. So it may pull all the way back up. So again, we're using what we're seeing in the candles to let us know the possible directions, okay? The inside top and bottom, if you don't know about those, are inside top and our lows to break. When we have a swing down and swing up, we would have our low, and then the inside of that low, that's going to be our inside bottom. Reverse for a swing up. So if we have a swing up, swing back down, the inside of that turning point, so you have a high, and the inside of that area would be your inside top. So they're very important to look for, because sometimes things will turn at these levels, basically making a higher high or higher low at that point. If this was to come and turn at that level, the inside top or bottom here, and then keep going back up, well, then that would be a higher low than clear back here. So good trade overall. I've got to pull my profit, but profit and loss, see where we're at. But positive trade on the first trade, losing trade on the second trade, again with the tighter stop, went in here with the tight stop, and then winning trade overall. Looking at the runner, so I always want to look at my runners, see, did I manage well? Did I bank a little extra profit? That's a big X. So this is where that price right there, around there, is where I closed out half the trade, and then managed my stop and moved it down a little more. So we got closed out right here. Let's see, that was 275. This is 250. So I did get a little extra on my runner, and that's something I always want to look at. Did it really pay off for me to leave that runner on, or should I have just closed it all, where I closed one? And I did make a little bit extra on the runner. Not great, but it was a decent trade overall. So I just wanted to cover the Canadian dollar trade off news release today, Friday, July 11th. Have a good day. Have a great weekend. Wind down. Forget about trading till Sunday night. Definitely look at your 4-hour charts and prepare for Sunday. Never start without looking at your 4-hour time frame and looking at your zones and your support and resistance level.